Ladies and gents, good morning, good afternoon, good evening. This is a new episode of Pair Trade Finder Pro, where we are analyzing the pair BN and BK, which are the tickers for Franklin Resources and Bank of New York Mellon, which are two companies in the financial sector. This is an almost perfect pair where all the parameters we checked are green, or very close to green depending on your interpretation. And it gave us a very good profit in a very few days, ending up in more than 24% return on margin in only 4 trading days, which is among the fastest pairs we have analyzed so far. As you know, fast profits equals to healthy and fast growing P&L curves. But as we always do, let's proceed step by step. As we were on February the 2nd, where the signal was advised by the software. And let's check the whole set of parameters in our cheat sheet that, as you can already see here, it is 100% green. This is why we are ticketing this pair as the almost perfect pair. So first thing is check news, with special focus on earnings and dividends that could have affected, as those are potential red flags we want to take deeply into consideration. So if I go to Nasdaq website, first thing that I observe is that around 2nd of February, there's nothing relevant in Bank of New York Mellon, but contrary to that, in Franklin Resources, there's two significant factors affecting the price. The first is January the 30th, Franklin Resources announced Q1 earnings, and that was something that moved substantially the price. But if I check here, the standard deviation move provoked by that fact was making it growing up to 2.37, but our signal happened 3 days after that, so there were 3 full sessions to absorb the earning results, and the price got stabilized in following sessions. So there should be something else that provoked the signal with a standard deviation of 4. So we continue investigating around February the 2nd, and what we observe is that February the 1st, BlackRock increased the position in this company, in Franklin Resources. So that is a big one, and by all means the reason for the signal trigger. Normally we don't like these exaggerated spikes above 4, but in this occasion we understand the reason behind it. You may argue it's a big one, and you may disagree with my appreciation, but having the stock price of Franklin Resources escalate so fast after BlackRock purchase means that many retailers were following the masses, and then this spike here is called to be reverted pretty soon. So that is why we are marking the check news with a green, because we fully understand the reason for the spike. Bank of New York Mellon earnings release happened January the 13th, so that box is a green. Both dividends were either 13th of March in the case of Franklin Resources, so 2 months away from signal, or BK dividends already happened January the 20th, so dividends is a green box. Ratio chart is moving sideways, up and down, with many crosses on the moving average. So this is those situations we like to see. Maybe we would have liked to see slightly more horizontal moving average, but well, perfection never happens in trading. But it's enough, in my opinion, to mark the ratio chart, this box here with the green. Per momentum, let's get back to the charts and analyze what we already have mentioned. February the 2nd, we have this huge spike here, and as we are getting short in this stock, this is a nice place to get in, because reversion to media is highly possible. Just take a look to how far the price was to its 200 moving average, and you will realize that the possibilities of reversion that happened afterwards were substantial. In Bank of New York Mellon, there was a growing up tendency and signal happened here, which is a kind of a small pullback, and we are long in this ticker, so it's also not a bad place to get into the trade. So with that, we mark per momentum with the green, as both legs were in a proper situation for us to get in. Standard deviation chart shows the signal, let me show you, above its natural resistance here. But again, we know the reason for that, which is the black rock stocks buy. It's very complicated to go in further than that, and reversion, it's very possible. So standard deviation is also a green. Now RSI was at 65 at this point here, which is not wonderful, but there's a clear divergence with the ratio chart. If you observe RSI even getting slightly downwards and the price growing up at the same time, so this is clearly a divergence. And when we have an RSI divergence, it's a clear mark that reversion, and we will mark that, we will tick that with a green. Correlation is quite good at 70%, and cointegration is 0.94, which is perfect combination. So these two together is a super. So a green for both boxes, correlation and cointegration. Volatility was at 2.26, which is below our first limit at 2.5. So volatility is a green. CAGR is more than 16 and drawdown is 5.17, which is quite good relationship, because having a CAGR 3 times bigger than drawdown, it's a very good relationship. So both boxes are green, CAGR, drawdown. So final conclusion of analysis is that we are hitting one of the almost perfect pairs in many sense, and I would have go ahead with no doubts. Hence, this pair deserves a good bet, so this reinforces our 10,000 per leg position in this trading, resulting in a final P&L of 965, which is quite good. Of course, 10,000 per leg position is not necessarily your case, so you should weight your risk and size accordingly to your account. And with that, the only remaining thing on my side is wish you very good and safe trading, and see you all in the next episode.